Welcome to this explainer. Okay, today we're diving into one of the most wild economic paradoxes out there. We're going to unpack exactly how Japan became the world's most indebted nation, yet somehow also its greatest creditor. And more importantly, we're going to look at why a massive global financial reset is happening right under our noses. This is a fascinating story. It's about a 30-year era of being completely left behind, an incredible accumulation of national savings, and a historic turning point that is already sending absolute shockwaves through global markets. Think about it. What actually happens when the world's biggest lender suddenly asks for its money back? Because for over 30 years, Japan has quietly acted as the world's ATM. They've pumped astronomical amounts of money into global markets, literally funding everything from American mortgages to European real estate. But right now, today, that immense flow of capital is violently reversing. To understand why the world's biggest lender is suddenly calling in its chips, we need to look back at how this whole system got built in the first place.
Act 1. The Plaza Accord's impact.
To really grasp this ticking time bomb, we've got to rewind 40 years to a room at the Plaza Hotel in New York. The year was 1985, and global economic powers made a decision that would forever alter Japan's destiny. The US basically forced the yen to appreciate to curb Japan's massive export dominance. And, well, it worked. Actually, it worked a little too well. The yen's value doubled by 1987, completely crushing Japan's export-driven economy. This sudden shock popped their historic 1989 asset bubble, pushing the Bank of Japan into increasingly desperate measures, from quantitative easing in 2001 all the way down to negative interest rates by 2016.
34 years. That is how long it took for the Nikkei index to finally claw its way back to its 1989 peak. For over 3 decades, Japan fell into a brutally low-growth economy. They were seemingly just left behind by the rest of the world. But here's the really fascinating part. During all those decades of stagnation, serious, diligent Japanese workers and companies never stopped innovating. They didn't give up. They steadily polished their skills bit by bit, maintaining an intense focus on precision and quality.
I absolutely love this metaphor from the sources to describe this era. They say it was like having a broken boiler at home while paying for the neighbor's heating. So while the Japanese domestic economy was absolutely frizzing, suffering from deflation and zero wage growth, the nation's wealth was simultaneously being shipped overseas to fund the rest of the world's economic growth. Act 2. Becoming the world's ATM. So with domestic growth basically on ice, all that money had to go somewhere to find a return, right? Enter the infamous yen carry trade. It is brilliantly simple yet massively influential. Investors and hedge funds would borrow practically free yen at 0% interest. Then they'd convert it to dollars or euros and buy higher-yielding assets abroad, like U.S. Treasuries paying 4%. They just pocketed the difference without risking a dime of their own capital. Because domestic interest rates were forced below zero, Japan's massive pool of domestic savings just flooded overseas. They became the absolute foundation for global growth. We're talking about becoming the top holder of U.S. Treasuries, funding literally 90% of the auto plants in Thailand, buying up European real estate, and bankrolling Australian mines. Japan was effectively financing the whole world. And this leads us to just an incredible paradox. Due to their national character of steadily accumulating savings bit by bit, Japan bears the world's highest government debt, but simultaneously, they hold the world's largest net foreign assets, sitting at roughly 471 trillion yen. They've been the world's #1 creditor nation for over 30 consecutive years. No one else even comes close. To put that debt into perspective, Japan's debt to GDP ratio completely dwarfs the United States, sitting at over 250%. So why didn't Japan just collapse under all that weight? Because this immense debt is almost entirely domestic. It is owed to their own citizens, and the Bank of Japan, fueled by that huge pool of national savings, rather than to angry foreign investors demanding their money back. Now, to keep this giant mountain of domestic debt from just exploding, the Bank of Japan pulled out a tool called yield curve control. They essentially committed to infinitely printing money to buy their own government bonds, forcing interest rates to stay at exactly zero. Sure, it kept the system alive, but it created a highly, highly fragile house of cards. Act 3, the catalyst. The tap finally shuts off. But hey, every system has a breaking point, right? And for Japan, the trigger wasn't some internal policy. It was basic resources. Japan is highly vulnerable because it relies on importing about 97% of its oil, and much of that passes through the incredibly volatile Strait of Hormuz.
So Japan suddenly found itself trapped in what you'd call a doom loop. As the Bank of Japan printed more money to keep interest rates at zero, the yen's value absolutely crashed to a 40-year low. This unbelievably weak yen made imported energy painfully, unsustainably expensive for everyday citizens. So what did they do? They had to bring more yen just to afford the oil, which, you guessed it, only devalued the currency even further.
Unable to ignore this massive imported inflation any longer, external factors completely backed Japan into a corner. On March 19, 2024, they were forced to finally raise interest rates. The tap of free money was officially shut off. It was a tiny rate hike on paper, sure, but a monumental psychological shift for the entire global economy.
Act 4, the Great Unwinding.
Now we hit the climax. What actually happens when the main pillar of global liquidity starts violently shaking? Well, the first major tremor hit on August 5th, 2024. The Nikkei crashed 12.4% in a single day, the worst drop since 1987. But it didn't stop at Japan's borders. It sent immediate shockwaves from Wall Street all the way to global crypto markets. Everyone realized, all at once, that the era of free money was gone. Global investors just panicked. They raced to unwind those yen carry trades, meaning they had to sell off everything from U.S. tech stocks to European real estate just to pay back their yen loans. Now that interest rates were forced to rise, those funds are rapidly returning to Japan. And this massive capital flight is threatening to destroy the economies of other countries that spent the last few decades totally relying on that cheap liquidity.
And here is a truly terrifying parallel from the sources. The central banks of the US and the rest of the world are now facing the exact same fate Japan did. To survive their own immense debts and higher borrowing costs, global central banks are going to be forced to print money to buy their own debt. It's exactly like a snake eating its own tail just to survive another day.
But look at the irony here. Isn't this precisely what could be called karma? While the rest of the world suffers the painful reverse rotation of capital, Japan is experiencing a massive renaissance. All those decades of diligently polishing their skills have paid off. Today, you literally cannot move forward globally in next-gen tech, especially AI, without indispensable Japanese products. Money is rushing back home, Warren Buffett is heavily investing, and tech giants like TSMC are building massive factories right on Japanese soil.
Act 5, a global reset.
We're literally standing at the precipice of a completely new global financial era. The entire global financial structure, which was comfortably built on 3 decades of cheap exported Japanese capital, is unwinding. The sources call this the Great Reset. The era of Japan freezing at home while paying for the world's economic heating is permanently, officially over. So I'm going to leave you with this final thought. Now that the world's biggest ATM is permanently closed, and all that wealth is flowing back to a newly revitalized, highly skilled Japan, how will this historic shift impact your financial future? Are you ready for the Great Unwinding?